Hello active traders, I'm Ken Calhoun from TradeMastery.com, and I wanted to share with you some ideas on the differences between good swing trading charts and bad swing trading charts. And the reason is that often when I do my Saturday webinars, I get people asking about charts that would be really difficult to make money with, in my humble opinion. So I wanted to give you the difference between charts that are good and what makes them so good, and the difference between those and charts that should be avoided. So here's a good example of a near perfect chart, TBT. One of my traders had mentioned this one. I like it. It ran all the way from 24 up to 38, and it did so in a nice continuous consistent run. You know, so many traders like in search of the holy grail of becoming consistently profitable. And I always say it's difficult to get consistent profits if you trade inconsistent charts. What you want is a chart like this that plows ahead day after day, week after week, no big pullbacks, no treacherous gaps, relatively easy to scale into, and a reasonably good chart. So this is a good example of the types of charts that we like. Here's another good one, WFRD. On this chart up here. Again, this one's gone from 18 to 36. It's doubled in 12 weeks. That's another quick tip, is make sure that the charts that you trade have at least 30%, 40% difference in the price action. What you don't want to do is swing trade a chart that has a range, compressed range, let's say $20 to $24 or $20 to $22, because there's not enough money to be made in that chart. What you want is charts that have big extended ranges. Now what we don't like, and we'll look at a couple examples of this, are charts that have an extreme range, way up, then come right back down again. Those are bad charts. We want consistent charts with big ranges. That's the secret sauce, or that's the key. Nice, clean, consistent, week after week, money-making charts that keep going up, that have big enough trading range to make a healthy profit from, potentially. So I'm just going to quickly go through these. SLB is another one. This illustrates a good example of a chart that has recent momentum, as well as a wide range, SLB the ticker, and a very good consistent uptrend. It didn't pull back, it didn't have any major gaps, it did a nice consistent breakout. So this type of chart makes sense because it ran from 33 to 50, okay? And it has lots of recent buying, as evidenced by the large green volume bar at the bottom here, and the large candle up here at top. So I wouldn't buy the immediate new high. I'd wait for a little pullback and then break out above the current upper resistance area. So that's SLB. A couple last minute ones here. VIST, another good example of a tradable, cheaper chart, from going from 7 to 12 though. It didn't just go from 7 to 8 or 7 to 9, it went 7 to 12. So $5 run on a $7 chart, that's good. And it looks really good up here. We have a shooting star, so we don't want to go long until it breaks up over new highs, but it's still an uptrend in progress. Two last quick ones here we'll look at are Halliburton, HAL the ticker. So if you're wondering, how to say, on the 3-month chart, it doesn't have to have been going up consistently all 3 months, but at least the last month we want a nice consistent uptrend like this one. So this has been a chop, 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 went down and finally lit up and kept going for an entire month, right? From late September up here till late August. And so this has been a continuous chart with lots of green candles, breaking above prior resistance and taking out new highs with an inverse head and shoulders pattern. And the last one here, NOV. Another good example of a momentum breakout chart. This type of chart, by the way, would be good for both swing and day trading. But this has a nice, good multi-green candle breakout, fairly easy to follow, and makes sense. So again, just a quick reminder. This, however, is the best kind of chart where you've got a nice, clean, like a piece of rope or string that's been tied tight, and a 45-degree angle breakout that's been going up week after week after week without a lot of troublesome pullbacks. Okay, now let's flip the chapter. Let's move to the next group of charts, and I'm just going to have a few here for you. Charts to avoid. Okay, one of them is extreme range pop and drop cheap stocks. Like here's on IMUX. If you see a chart that say went from $3 to $6, that would be really stupid to swing trade, because if overnight in one day or something, because this is what I call pop and drops, and you don't know how far it's going to go before it drops. And sure enough, IMUX gapped down just last week, Friday I should say, down to just 2 or 2.5 a share. Think how much money you would have lost if you'd bought this up at like $8 or $9 and held it. You would have lost 70% or so of your money. So that's terrible. So charts that have vertical, near 90-degree spikes, especially multiple points on cheap stocks, are terrible. Now, a lot of traders meet their doom by getting overly greedy and saying, "Oh, it's running. It'll go up to 20. I'll make a fortune." Next thing you know, it's down to 2, and they lost most of their capital. So avoid charts that have near vertical runs up multiple points, particularly if they're cheap under $10 stocks like this. That's what I call pop and drops. Another one is a meme stock, Bed Bath & Beyond. You can see BBBY here had a big spike up all the way here to 30 a share, and then crashed down to where it's currently right near 5 a share. Okay, so don't get suckered into charts that are making extreme, big, huge momentum runs unless you're day trading. And they're fine for day trading, for big range, that's what we like, or high momentum, high volatility charts. But for swing trading, you want charts that are slow grinders, slow, steady mover uppers, charts that don't have, I would say, day trading should be exciting, swing trading should be somewhat, predictable and easy, and should not have a lot of drama in your swing trading charts. They should have a nice steady uptrend and big range. All right, a few other ones here to avoid. Good examples. The category for this would be expensive stocks with relatively narrow ranges and lack of a strong trend. So although it's a fine company for an investment, Johnson & Johnson, I feel very safe and comfortable. Well, I wouldn't use the word safe, but I feel fine investing in companies like Johnson & Johnson. But the range is really terrible. It's only got 60 to 75. So for $170 a share, it's only got, a 14, 15 point range. So there's not enough range. There's not any discernible trend. And the intraday moves are multiple points. So this would be really difficult to swing trade. PayPal's another good example of one I would not swing trade myself, at least. Kind of a choppy, slow grind down. No reason to take a shot at that. Also expensive for the range you get. And RIVN, another terrible looking chart that probably wouldn't be too good. So anyways, we look for opportunity out there, and you're looking for which charts have the profit potential. Just keep those 3 key tips in mind. One is you should have a relatively consistent uptrend, at least the last month, 45-degree angle breakout. So consistent recent trend that's relatively narrow in the channel, relatively narrow. The other is the price, so consistent trend. The other one is the range should be relatively wide. The overall big picture range should be in a nice, 40, 50%, like this one from 30 to 50. Almost, but not, well, not near doubled, but getting there. TBT is a good example, one that went from all the way down at 23 to 39. So anyway, so that's number 2, is charts with big range. And the third is make sure that it has relatively consistent price action. Because you and I both know it's very difficult to make money as a trader if you get stopped out all the time with inconsistent charts. That go up enough to get you excited, you get in, and then 2 days later it's back down to where you got to take a stop. And then 3 days later it's back up again. It's very frustrating. So the fix for that, kind of like when you hire employees at a company, if you just hire, good, honest, hardworking people whose stories line up and they're consistent, that's a much better work environment than people who are inconsistent. And same thing with your charts. You want consistency, trend, wide range, and looking at the patterns that make sense. And a last note, I do cover swing trading charts every single day in my live trading room at trademastery.com/live. At the end of the day, right after immediately after, like 4:01, right after the end of the trading regular session, we pull up swing trading charts. We just take 10 minutes or so, 10 or 15 minutes, go over 3, 4 of the very best entries. I often swing trade, put on my trades after the bell, because you want to see, quick tip here, you want to have a two-day breakout that ends near the high of the 2 days, and that's usually a good signal for a swing trade if it's to be made. So I cover those for everyone in the live room. Do be sure to visit and join us at trademastery.com in the live room, and I will see you in our next video. Thanks so much for being here, and I wanted to wish you the best for success in your trades. Bye for now.